Yeah, what's good, guys? Welcome back to this channel again, where we do top and top down analysis, making it more simplified for your trading experience as a trader. Remember to hit the subscribe button and turn on the notification bell if you're new to this channel. Let's dive in. We're actually going to be looking at some conferences that sponsor the top or sponsors top down analysis, and this is just a checklist that was prepared for this course, and I'm actually going to be walking us through this checklist. The first we have here is the SSL. SSL has to do with the sell side liquidity. For those of us who are not conversant with the acronyms, we also have BSL. BSL has to do with the buy side liquidity. Now what this actually means is that your sell side liquidity or your buy side liquidity has to be rated for you to know that that particular chart is actually being of a high probability for your conference, and then you can be able to stake your trade. The next one we have is your market structure sheet plus displacement, your fair value gap created. Very important. You must also look at your OTE, and as well as talking about your fair value gap entry and your OTE. Very important. Then your T futures, which is your take profit at your standard deviation 2. Very important that you have to look at that as well. You also have the sell side and the buy side liquidity can be in the form of previous week low or previous week high, which you can see right here. It can also be your previous day low or your previous day high as well, or also your Asian low and your Asian high. Now you also remember, for those of you who are conversant with my videos in this channel, you'll be able to see that I've really taken time to talk a whole lot or that on conferences that has to do with the time frame of the market, which is very important. If you have not, you could check this channel and you see that. Now let's deal with the first one. Wait for a sell side or a buy side grade liquidity rated. Now this is actually what it looks like. Remember, the market goes in this form, as you can see right here, this sharp edged sinusoidal form and all of that. This is when there's an accumulation in the market. And when we talk about liquidity, these are all of these points you are seeing right here is the liquidity. As you can see, this Asian high and Asian low, those are your ranges you need to pay attention to. And you saw that there was a sweep in that Asian low. That is actually a sweep in the sell side liquidity. The next one we're looking at is you have to also wait for a market structure shift or displacement, or with displacement as the case may be. Now this is actually what we're talking about. This is actually a market structure shift. Remember, we're still within our Asian range of high and of low, you understand, and there was a breakout, as you can see right here, being indicated on the Asian low. There was a breakout there. So that sweep was the sweep of the sell side liquidity, and as you can see, the market structure shift right here indicated. This is to tell you that there's a reversal in the market, meaning the market has moved from a downtrend and it is gathering potential to move to the uptrend. Yes. Now the next thing to look at is for your fair value gap. Now when we talk about fair value gap, we're talking about imbalances that occurs within and around the market at intervals. So you have to look for the fair value gap, and where you have this blue indicator rectangle here, that shows that there is a fair value gap there immediately after this sell side sweep in liquidity and all of that. Now once you see this fair value gap here, then it means there's an imbalance. Now what market will do is to come back to that imbalance, correct all of those imbalance, and then take the desired direction it actually wants to take, and that would now involve your OTE, which is your optimal time entry, and your of course the fair value gap that is indicated there. And as you can see right here, we go on a long trade, and we are having our fair value gap there, and immediately price came back to that fair value gap, correcting all of those imbalances, and then we stake our trade, and we have a very beautiful walk up, as you can see right here on your screen. So pretty much this is how you walk yourself through down your top your top down analysis to become a very profitable trader. And I also said something, we also talked about the TP, which is your take profit standard deviation, or your nearest buy side or sell side liquidity. A lot of persons doesn't know how, or do not know how to stake or how to locate your TP. They just feel okay once the price starts moving up, yes, let it just be moving up. As a good risk manager, you should be able to understand where the most recent buy side liquidity is. That is where you're going to be taking your staking your first take profit. Now if you have them conjoined to each other, you could have the first immediate buy side liquidity as your TP, first TP. The second one would that be your second TP, and you keep moving it that way. But remember, if you're holding market for too long, it might work against you in the long run. That is why most of the times we just focus on a risk to reward ratio of 1:2, the minimum, and or if the threshold through which the buy side liquidity, depending on the market, as you can see right here, we're on the buy side trend. So if actually the buy side is not that the distance apart from where you have your entry point is not that much, then you can just be on a RRO, which is your risk to reward ratio of 1:2. But in converse is the case. If you have it beyond that, you have a larger threshold in which you could leverage, then you can go ahead and stick 1:3, 1:4, 1:5 risk to reward ratio. So I believe this has actually helped someone in terms of your top down analysis, on your currency pair, depending on what currency pair you want to use. I'll also say this as a wrap up in this video: you mustn't trade all currency pair. You have to just look for the one that is you're conversant with. Look for the one that works for you. If it is actually gold that works for you, fine, stick to it. If it's GBP USD, stick to it. If it is AUD JPY, stick to that pair that works for you, so that you don't have issues in the course of your trading. Because most of the times confluences differs, in as much as yes they work in most of the pairs. Yeah, you need to also go extra miles to ascertain that yes, this conference is actually going to work for you. So I believe this video has been able to help you or help someone out there. Do well to share this video to someone you want to help to be able to perform his top down analysis accurately, to be able to become a profitable trader. Don't forget to hit the subscribe button, turn on the notification bell, and you would be notified whenever I will come your way again. If you want to be part of our community, the links are right there in the description. You want one-on-one mentorship, the links are right there in the description. Do well to be part of it, and we'll see you in class.